Those tech stocks yesterday at this hour were down significantly. You were talking about the NASDAQ down by 1,000 points in the pre-market at this hour. We want to bring in a guest to talk a little bit more about this. JoAnne Feeney is partner and portfolio manager at Advisors Capital Management. And JoAnne, the sell-off that we saw in the tech stocks, was that a buying opportunity for you, particularly in names like Nvidia or Broadcom? What did you think?
Yeah, good morning, Becky. You know, we're longtime investors. We already have pretty decent-sized positions in both Broadcom, which we've owned actually for 10 years, and also Nvidia. So the news out yesterday obviously started a lot of people, but it doesn't fundamentally change our view. In the long term, AI demands and applications are going to continue to drive the demand for compute power. And we can get into the details of why, because it sounds a little counterintuitive given what we heard yesterday.
All right, why?
Yeah, so, you know, it's pretty obvious that these guys have come up with a more efficient model. And because it's open source, people are right now, you know, checking the veracity of the efficiency of the training part of it, but also the inference part. Yeah. And if they've come up with something that really is more efficient, terrific. Imagine all the new applications that will be able to spring out of something like that. But the chip guys, Nvidia in particular, really took it on the nose yesterday, including Broadcom. And the question there becomes, if you're Amazon, if you're Microsoft, and all of a sudden you have a more efficient model, are you going to, you know, take your foot off the accelerator and say, okay, I guess I'm done. I don't need to spend all that money. In the meantime, Microsoft across the street is now taking advantage of it, buying all those GPUs and delivering something even better. So one has to look beyond the obvious to the competitive forces between the AI providers, OpenAI, Amazon, Microsoft, to really figure out how much they're going to spend. And there's great analogies from the past on this.
If you think that it's game on, then a decline of 17% must have been a big buying opportunity. Did you put more money to work in either shares of Nvidia or Broadcom yesterday?
No, we didn't. You know, one has to put that in context, though, right? I mean, we got a lot of questions from clients about this. When you look at the year-over-year performance, I mean, Nvidia was still up 88%, something like that. Broadcom up over 60%. And so, you know, there's a little bit of a pullback, a little being a lot when it's a company as big. Yeah, when it's a company
as big as
the biggest
market cap evaporation in history in one day.
Exactly. I mean, when you're that big, you know, disruptions in risk in the future, right? An increase in risk, which clearly this is, will cause multiples to contract. Reductions in potential growth forecasts will cause the stock to fall. But one has to think back to history. I mean, imagine you're in the 1980s, 1990s. Intel has come out with a better CPU. Per bit, you know, computation costs went down for decades. Did people buy fewer Intel chips because they said, oh, I got all the computing power I need? No, they kept buying more. So even as the cost per compute went down, the demand continued to rise. And we'll see that.
But this gets to the question of valuation for this stock. Did you think it was overvalued 2 days ago? Did you think this was a situation, or did the situation change to say, okay, maybe there's not going to be such a stranglehold, and Nvidia being the only company that can actually deliver on that or not? Because if you didn't think that had changed somewhat, I would think a 17% off would be a great buying opportunity, unless you thought it was overvalued to begin with.
No, we didn't think it was overvalued. We did recognize, though, that there's an awful lot of growth embedded. And what yesterday taught us is that expectations can change suddenly when a new piece of innovation comes out, when new information comes out. But if you're a long-term investor, you know, you don't move on that necessarily. And we already had a full-size position. We didn't want to add to it. And that also speaks to the importance of building, you know, client portfolios that are diversified. And so that's what we try to do here at ACM. But, you know, one of the things I think people should recognize now is that we're going to see a lot more information come out about this. And more importantly, we're going to see how the companies using these and developing these AI models react. Remember, NVIDIA still is the only game in town, right? We're going to see some new chips from AMD. But if you want the best, most powerful compute power, you still have to go to NVIDIA. Now you have a more efficient model to run on that more impressive compute power. It doesn't mean you're going to back away and say, well, I guess I won't use it all, or I guess I won't take the most advantage of it. So it doesn't change.
I understand your argument entirely. I would just think if you're really committed to that argument, you would see yesterday as a buying opportunity and put more capital to work. Did you buy anything yesterday, or is this a wait-and-see moment to try and figure out how this is all going to shake out?
Yeah, so, I think for an investor who wasn't already fully exposed to Nvidia or Broadcom, it was a fantastic buying opportunity. But there was still a lot more of an uncertainty associated with it, so I could see why people might be reluctant. Again, we have full-size positions. We've owned these companies for a long time. We're used to riding out bumps in the road like the one we had experienced yesterday.
Got it. Is there anything that looks more attractive to you? Like yesterday, the conventional wisdom was a company like Apple might do well. It was up more than 3% on this. Has it changed the game for any other players? And I guess, how do you assess this? How do you sit down and figure out what kind of shifts do we want to make in the long-term portfolio?
Yeah, so if this proves to be really a big change in efficiency, right, then it's going to make a lot more applications that much more powerful. And so one looks to those that want to use those applications or the software guys. And we've seen software really be underappreciated over the last couple of years. So that's a real opportunity, whether it's a ServiceNow or something else, potentially. So that's a place to look.
JoAnne, why do you say that?
Well, so initially, right, what we're going to see either is cheaper development and deployment of these AI models. And so a company that is making use of AI models to improve their products, they're going to be able to make better, faster, more powerful innovations. So their products are going to become more useful, and that should boost their revenues and sales.